everyone. You're tuned to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you.
As we're talking about the grain market right now, because the recent WASDE report has just come out, first wanting to talk about the foreign exchange.
Yeah, look, the biggest mover I'd suggest today, over the last 2 days, has been the strength in the US dollar. We've seen the dollar index rally back above 105 and a quarter. That's the strongest dollar value we've seen since mid-November 2023. And that probably had more today, I'd suggest today, with the downside in commodity prices than the WASDE report itself. And we'll sort of see that, I think, reflected in the WASDE to a point, in the fact that exports have just really been struggling and continue to struggle. And across a number of the complex, USDA has actually reduced our export numbers. And look, the big move in the foreign exchange rate and the value of the US dollar today was some of the US financial news that came out in the last couple of days.
But even with that, yes, it had an impact, but we're down a nickel for on corn futures on the closes yesterday, and a nickel for the May contract, a nickel and soybeans are basically 5.5 cents, both of them being down. And for hard red winter wheat down to 11 and a quarter. So of course, in that supply demand balance sheet, there's a little more growth in ending stocks than in some of the others, relatively speaking. So anyway, not a surprise, but we'll come back to these by commodity, but the soybean export number was reduced, so that was important very much. That had to do with pace to some degree, but the pace is affected, of course, Guy, by the foreign exchange rate, as you're talking about. The wheat export number unchanged, corn export number unchanged. So far, it's probably a bet more on what's happening in soybeans and more on the future in terms of where the impact might go.
Yeah.
And wanting to take a deeper dive into all of those commodities, and the first one to talk about is the wheat.
Before we came on air, we were talking about the issues that are happening in the market with regard to crop conditions and acreage numbers that came out in that end of March planting prospects report, etc. Those aren't in this April. Most of those are not in the April the 11th report. They will come to bear when we get into the May report, and with that we'll start to look at for the first time in WASDE reports at what the 2024-25 marketing year will be. And of course, for corn, grain, sorghum, and soybeans, that won't start until September 1. However, it will start, that 24-25 marketing year will start June 1 for wheat. When you look at wheat, on the supply demand balance sheet, some small changes, a little reduction in wheat imports, down about 5 million metric tons, down to 140. And what probably came out of that stocks report, Guy, and at the end of last month was the 30 million bushel reduction in feed usage projected by the USDA, and that's kind of a big deal. I know, as Shelby and I have been watching the Garden City for new crop bids for corn versus wheat, and they've been hovering at that low level. But with this report, and basically the USDA is saying that we don't think wheat feeding is going to come in strong, at least not this year. It may still happen for next year once we get to June 1. If we have crop damage from what's happening in Western Kansas right now, it might come to fruition. But as far as this marketing year goes, they look at the last 2 quarterly reports and haven't seen pace there to support that, and went with what they had. You did see at the end of the line, or at the bottom line for domestic usage, ending stocks being up 25 million bushels, went from stocks to use of 30.3, basically to 36.3 to 38.3. and prices down about 10 cents. And really the wheat market continues to languish. A lot of that has to do with what's happening internationally. And Guy, I'll throw that to you.
Yeah, look, just before we move to international, I was just looking at the wheat by class. Hard red winter wheat ending stocks to use is just a hair under 50% compared to last year, just at 33 1/3. And it's just, that's a very, very sloppy hard red winter wheat balance sheet, particularly for Kansas. And it wouldn't surprise me to see a bit of wheat feeding come in there the first quarter of that wheat marketing year as we get to harvest in July, August, Sep on that.
Hard red winter wheat exports last year were, the last marketing year, 224 million bushels. This year at 135 and has been dropping. So again, the Black Sea competition really for all these countries that are competing with that class of wheat still a big thing.
Yeah, and looking overseas internationally now that at the Ukraine and Russia, Russia first, look, the production number was unchanged for them, but they're still forecasting a record 52 million metric ton crop over there. The Ukraine was unchanged. Exports were increased by 1.5 million metric tons to 17. It's amazing their supply chain domestically and moving that grain to export channels has been quite resilient over the last 2 years. EU crop production just a hair, 500,000 tons higher. But exports were lowered by 2 million metric tons. And the one that I watch pretty close is China imports unchanged at 11 million metric tons. That's compared to last year at 13.3.
And
and wanting to move on.
Just a second, there's still a hand grenade to wheat market that with all of that, all the pessimism, all the negatives going on in wheat, we still have seen the ending stocks number and stocks to use drop from 19.65, lowest since 2007, 2008, down to 19.53%. That's for US minus, for world minus China. So as long as we keep having large crops come out of the Black Sea, then we have what we have. What happens someday when that doesn't happen, or if they turn dry over there, then we'll have a dramatically different market, but we don't have it yet.
And wanting to also touch then on what corn is looking like.
Domestically, really strong usage. Again, low prices tend to encourage use and move supply demand curves in such a way that the quantities of use are more. And you saw an increase of 25 million bushels, again, driven by what they saw out of that last stocks report at the end of March in feed usage, feed residual usage, ethanol up 25 million as a projection. So domestic usage up 50 million bushels, ending stocks down by the same amount by 50. So we're still over 2 billion, but it went from 2.17 down to 2.12 billion bushels. Stocks to use from 14.9 to 14.5, price down about 5%. So really, I guess a pretty positive story, really, in terms of domestic demand in the U.S. and some thoughts overseas, Guy.
Yeah, just looking internationally, not a lot of big changes in the wheat. Are seeing EU wheat imports reduced 1 million metric tons to 21. Mexico imports were up 500,000 tons, which that's good for the U.S. Southeast Asia was down about 500,000 to 17.75 million metric tons. So look, not a lot of changes here in the wheat situation, and as we're coming to the end of that marketing year, a lot of that's pretty well locked in.
Yeah. So the wheat and the corn, again, the corn.
I was talking about corn. So.
Yeah. Well, they're pretty similar.
Yeah.
A lot of similarities in these things, so it's easy to get them mixed up. The ending stocks figure did move lower. Again, world minus China, 106.4 million metric tons was 96.15 last year, and even though it moved lower, it's still markedly higher than last year. Large Brazilian crop, and until we get some other signal on that, actually, so we move into May, June, we'll start to pay attention to the size of the U.S. crop.
Yes.
Prospects for that, and that has potential to affect the market.
And as we round out our first segment of talking about wheat and corn, and we'll talk about sorghum and soybeans in the second segment, or the second part of this, What would you like to tell Kansas farmers when it comes to wheat and corn and maybe what they should pay attention to?
Well, I'll take a stab at that first. I think that the world market is decidedly bearish in its narrative. We have a lot of things that could affect it. None of them have yet, until they're not inclined to pay much attention to fears. They must be looking to actually see numbers come out of this. So, and I keep wondering how did we get that place? Well, I think they got conditioned last summer. The market drummed up fears of a drought in the Central Eastern Corn Belt. Turned out had record yields. So I guess we're kind of all Missourians now left to actually be shown short crops before the market would respond higher. Guy?
Look, I think the market's fairly comfortable with the underlying fundamentals. And again, I turn back to the macro issues and that foreign exchange rate and the dollar. I think that's going to have a bigger impact. That's where we're going to see some volatility in the next 3 or 4 months, particularly coming up to an election situation. And that's what I'd be watching a little closer. The thing that's frustrating me, I don't know if the news on that side is any brighter. Increasingly, I don't think we're going to see a cut in interest rates this year, even though some of the dialogue's that way. I just don't necessarily see it happening, or the likelihood of it decreasing. And that's just not going to bode well for U.S. commodity prices. Again, the U.S. is a residual store of grain. As we increase that those carryout numbers, that's going to hang a bit heavier on the U.S. situation.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our conversation.